And in general, you can also think in this way, right? Remember we say if we double the time, it's going to be 65 times. So let's double the time of existence of Bitcoin, which is 15 years. So if you go all the way to 15 years in the future, that will be 2040, right? We are talking about 65 times. So if it is about 65,000 right now, so $4.5 million, something like that. So in 15 years from now, will be about $4.5 million. Now, at the conference, Saylor show all these possible scenarios in 45.
A mathematical approach to understanding Bitcoin's price progression highlights a power law relationship, offering a formula that estimates its fair value over time. This method, supported by examples, has shown surprising accuracy in predicting future prices, providing a unique lens for forecasting the cryptocurrency's market behavior. In a similar vein, financial analyst Giovanni Santostasi, during a conversation with podcaster Robert Breedlove, delved into Bitcoin's power law relationship and Bitcoin's price trends. He presented insights into Bitcoin's adoption-driven growth, gave predictions, and stressed the importance of understanding the adoption curve. Santostasi also cautioned against over-reliance on models, emphasizing Bitcoin's potential as a worldwide standard. Giovanni Santostasi argued that increasing the number of Bitcoins could result in a big price increase, emphasizing the significance of understanding this link. Santostasi discussed his view on Bitcoin's future, hoping it will be embraced without hyperinflation and become a neutral standard for transactions. He believes that Bitcoin's rise will stabilize the economy and promote worldwide transactions. Watch clips from the interview for further insights into Giovanni Santostasi's conversation with Robert Breedlove. Please like this video, subscribe to the channel, and turn on post notifications for more content. Enjoy the video.
So in general, what does it mean, right, when you have a power law? It means that you have a relationship of this kind, right, where you have a y equal x, right, and that a is some kind of proportionality quantity, and then to the power. In the case of Bitcoin, I say 666, but it's really 5.83 if you measure, because never is perfect exactly, like round numbers, but very close to 6. And then you have this 10 to the minus 17. Why is 10 to the minus 17? Because basically, if it's really, you can use this equation for Bitcoin where you can say, hey, give me the number of days from when Bitcoin was created, I will give you a reference price. It's kind of like the fair price for Bitcoin. And you can try, you can say, well, what was the price at day one, right? So 1 to the power of kind of 6, right? 1 times 1 times 1 is 1, right? And then you multiply by that very small number, 10 to the minus 17 is 0 with 16 zeros, 1. So basically Bitcoin was like nothing, right? It was almost nothing. And then you can say, okay, well, all right, how much time did it take for the price to be $1, right? So you can also answer the question, like you can try to plug in their days until basically you get 1. It turns out to be 880 days. So if you plug in that equation, 880 days, you get $1. Now, if you go and look at when Bitcoin really became $1, it was February 11, 2011. So it took about 915 days, something like that. So the equation say 880 days. The real Bitcoin took 915. And so you can try with $100, $1,000. You always are within few weeks. And you had like the bear case scenario, you had the bull case scenario. The middle one was $13 million for Bitcoin in 45. This equation says $10 million. For example, say, okay, let me include 10% inflation rate, whatever inflation rate you want. And then what you get, you will still get the power law, but with a little bit less of a slope. In general, though, the idea is that it's not going to have a huge effect because we are talking about 65 times, right? So you can tell you, okay, Bitcoin will be 65 times. How many times inflation will be? And what if we sell it, say, look, actually it's going to help with this. It's going, in particular, if we start to say, maybe we can pay back some of the debt using the Bitcoin gains and so on, right? Like some of the government wants to do. So it could be a stabilizing effect. My idea is that I would like to see Bitcoin being adopted without hyperinflation, because basically at a certain point, it will be clear that you are dealing with $100 trillion dollars asset,
Yeah.
right? And it cannot be ignored. And it's really clear that is, helping with the economy, helping with transaction, with different exchanges between nations, maybe even making them agree on no, okay, the standard should be the dollar, the standard should be the yen. Well, what about something neutral like Bitcoin? So I think my vision is that Bitcoin will win in that way, like with the ETFs.
Giovanni Santostasi expressed his thoughts on Bitcoin's price trend, mentioning that he had explored previously established correlations between price, addresses, and time. This resulted in new insights, which he attributed to Bitcoin's growth being driven by adoption rather than traditional demand-supply forces. He pointed out the importance of understanding the adoption curve, highlighting the network's early days and how it lured new members. Giovanni Santostasi warned against over-reliance on algorithms and advocated a cautious approach to financial decisions. He sees Bitcoin as a complicated system with inherent uncertainty, emphasizing the significance of being prepared for unforeseen changes. Understanding the fundamental nature enables investors to make informed decisions and manage the market with knowledge. Santostasi's method blends analysis and prudence, acknowledging the limitations of models in predicting Bitcoin's future. Let's go back to the interview and watch more clips to gain insights from Giovanni Santostasi.
I still remember I went to sleep, I couldn't sleep, and I was thinking about this damn 6. And then I said, you already found all these other power laws. Can you put them together? You found one between price and addresses and time. Let's go back and measure them again, because I didn't remember the exponent. I know that we were power law, but and then when I plotted all of them, hash rate, addresses, price, I realized, addresses grow with the power of cube. The price reacts to the addresses with the square. So basically we have price equal addresses square, but that grows with the cube of time. We have a power of 6, right? Because the time to the cube squared give you time to the 6. And now we know why we see that beautiful power law in time, because there is adoption, right? So this is why the diagram, because if you read the diagram, right, it says, okay, there is demand of store of value that is starting with Satoshi. Satoshi created this. He said, okay, I'm going to put my energy and time and focus on this thing and this creation. That attracted his friends, right? Is cyberpunk people say, okay, yeah, this is a cool project. Let's help Satoshi with debugging. And Alfini started to run away. I remember that post, right? I'm running Bitcoin.
Yes,
so he's
Bitcoin,
using
right.
his energy atom and he's putting some money and some energy, right? That we are linked and his mental energy in the system. And that's what he does. And so at every step, I show the relevant power law, right? In that case, is the power law of adoption, which grows with the cube. And then you go to the next step, because that increase in demand, I would change the word demand, because it's more like the demand and supply, and with Bitcoin doesn't work like that. It's more like adoption, right? So simply, I want to join the network. The next one relevant is how the adoption relates to price, right? Through the Metcalfe law. So it's a direct relationship. Increasing adoption makes the growth of the price because of this relationship, the square. It is actually, if we double the number of people, we get 4 times the value, right? Because it goes up with that square, right? It's that multiplicative effect. It is amazing. Because if it was this were, and is a, it's a philosophical issue, this why demand, because usually demand for an asset should bring the price linearly up, right? But in this case, because it's adoption, some people do want to trade. And I think that if you do it cautiously, like, don't do something stupid where you think that we are reach the top according to this model, because this model can help you, tells you, like, there are these 2 standard deviations, we are probably close to a top. Don't do anything stupid like selling all your Bitcoin. Do you want to maybe buy some put calls against most a MicroStrategy, maybe so you can multiply, do it cautiously, right? And make a plan, maybe I sell 10% because it's still an asset, it's still, there is that noise and that indetermination, etc. But
and it's depicting a complex adaptive system that is beyond modeling in its reality, right? Like we may find models that are very useful, we can see it in a certain way, but that doesn't mean we can predict the future.
Yeah,
basically.
but if you are doing something cautiously and with awareness, and you want to be a little bit more aggressive, I don't see what is wrong
risk
with
and
that,
reward,
right? Why not?
Friday's U.S. jobs report has fueled speculation that the Federal Reserve may begin cutting interest rates, with the first move potentially arriving next week. However, what might seem like a positive shift in liquidity could pose a challenge for risk assets, including Bitcoin, if the Fed enacts a 50 basis point, 1/100th of a percentage point, rate cut on September 18th, according to 10x Research. This move could have significant implications for the power law relationship that has been central to understanding Bitcoin's price progression, as discussed by Giovanni Santostasi. Santostasi's analysis hinges on Bitcoin's growth following an adoption curve, where significant macroeconomic events, like Federal Reserve rate changes, can influence price predictions derived from the power law model. While the Fed typically makes rate adjustments in 25 basis point increments, larger cuts or hikes, like the 50 basis point changes seen during the 2022 inflationary tightening cycle, are reserved for times of economic urgency. If the Fed implements a 50 basis point cut, it might indicate growing concerns over an economic slowdown, which could alter Bitcoin's price trajectory and disrupt the adoption-driven predictions outlined by Santostasi. Marcus Thielen, founder of 10x Research, highlighted the tension between economic risks and market reactions, noting that while a larger rate cut could signal deeper concerns, the Fed's primary goal would be stabilizing the economy, not managing market expectations. This interplay of macroeconomic factors could influence Santostasi's forecast for Bitcoin's fair value, especially as investors reassess their exposure to risk assets like Bitcoin. Thielen added that the Chicago Mercantile Exchange's FedWatch tool currently places the odds of a 50 basis point cut at 30%, though the growing consensus is that the Fed may have overlooked warning signs in the labor market, much like it did earlier in July. What are your thoughts on Giovanni Santostasi's idea that Bitcoin's growth is driven by adoption rather than traditional demand-supply dynamics? Do you think his power law relationship predictions will hold in the future? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.